over the last 2 centuries, and we would expect that central banks would think twice before disturbing this source of capital to the private sector.
That's a heinous lie. I mean, it's so ridiculously over-the-top absurd to say that fractional reserve banking has contributed mightily to the growth of the economy. It has grown mightily to the growth of debt. I mean, it's put the globe into this debt straitjacket of hundreds of percentage of debt to GDP around the world. It's essentially like saying to Pablo Escobar that putting baby powder into his cocaine, which is like fractional reserve banking, it contributed enormously to his cocaine empire. That's true. But unless you want to run the world like a cocaine empire, like the Jamie Dimons and the Lloyd Blankfeins and the new central bank president, then it's not healthy for the global economy. They're in denial. Fractional reserve banking is part of the whole tapeworm problem. It's the parasitical problem. It's the whole destruction of the economy.
Yes, it's lended to, well, no pun intended, to a growth in debt, but also a growth in fraud and a growth in injustice, I would say.
Really, really interesting. So, I mean, this is a big problem, is that, you know, the last 10 years, we've been lending, or the central banks have just been pumping money into our economy, you know, to get us out of the recession with very low interest rates. And basically what this has done is inflated stock market prices, inflated real estate prices. And for me, this is great. I started buying real estate in 2010. I made most of my real estate purchases from 2010 to 2012. So I've done very, very well for a millennial, but you know, I consider myself very, very lucky. And I will make another video to kind of go over how I got into all the real estate investments. But you know, I was able to find baby boomer investors who had a lot of money to give me the properties. But the issue that Max Keiser is bringing up, that I want to bring up, is that this basically is not a good system. It is kind of like a drug dealer. So in order for us to get out of the debt problem, they just created more debt at low interest to get us out of the debt. So it's like drinking, you know, you got a hangover, so then you're now taking shots to get out of your hangover. And they've been doing this now for 10 years, and finally they're like, okay, we need to raise the rates, because you know, if we keep doing this, it's going to create inflation problems. And boom, what do you know? The market takes a dive as soon as they try to raise interest rates. And this is a big issue, and this is why people got into cryptocurrencies, because people don't want to have it where, you know, they work for $1 and then maybe 2 years later, 3 years later, their dollar is really just worth 50 cents. You know, if the dollar menu at McDonald's becomes the $10 menu, all that money you saved in cash is worthless. And that's one reason why people believe in cryptocurrencies, is that you don't have this leverage. In fact, if you buy real estate right now, if you buy stocks right now, I mean, it's all leverage. You know, I bought my first house, no money down. I did a 3% down loan. I have my broker's license in real estate, so I got actually my 3% down payment back as real estate commission. And I can't do that with cryptocurrency. They strip the credit card payment, so I can't even buy crypto on credit cards. So these prices that you're seeing for cryptocurrency, it's all, you know, it's not leveraged. But with the rest of our market, you know, those big companies like Apple, Google, Facebook, whatever, they all have leverage. And when those interest rates start to go up, they're going to be in trouble, and there's going to be another credit crunch. And you know, how long are the central banks going to be able to do this? It's a good question to ask, and that's why I highly recommend, if you got a chance, you know, watch Max Keiser. He's on YouTube. Subscribe to his channel, because he brings up a lot of good points. And you know, he's one of the first guys to kind of say that cryptocurrency is a great investment. He's been bullish about cryptocurrency since 2011. So you know, follow what he has to say. And it's a great question, is like, how long this, you know, easy money game that the central banks have been playing for over 10 years, how long is this going to last? And like I said, they've done a great job of inflating stock prices, real estate prices, and even education. You know, in the US at least, you know, education's inflated, you know, the prices, because you know, you can get into debt. And that's how bankers make money, is that they want everything to be credit. You know, you buy your car on credit, you buy your house on credit, you buy your groceries on credit, and guess what? You become a slave. You become a sharecropper for the banks. You know, you basically give up 25%, 30% of your income, you know, as interest or whatever you want to call it, to the bankers. And that's why there's so many banker billionaires. And you know, is cryptocurrency the answer? I don't know, but I like the idea that there is no CEO of Bitcoin. There is no Jamie Dimon of Bitcoin. So that's why I invest in it. I'm very bullish on cryptocurrencies, but only time will tell. But please, please subscribe to the channel. I'm not going to only be covering cryptocurrencies on this channel. I will be covering global trends. That's why I like to bring in videos from like Max Keiser, because you know the economy is tied into all asset classes. That's why I will cover real estate. That's why I'm going to cover investing, stocks, bonds. Obviously, it's still going to be 80-90% cryptocurrency, but I'm going to try to cover a little bit of everything, and also try to put in some of my own investing advice and kind of give a background on how I was able to accumulate real estate, how I was able to get into cryptocurrencies and other investments. And one promise I make for the channel, I will never sell you any shit. I'm not going to sell an how to get rich book or any of that stuff. And in fact, I am going to preach that you pay 0 fees on trading. So try to find platforms like Robinhood where you pay 0 in fees. Let me get there. Yeah, 0 in fees. And you know, find ways to save money. You know, don't spend. That's the investing 101, is just don't waste your money. And then the money that you save from not wasting, invest it, you know, in smart assets. That's the goal of the channel. Hopefully get everyone who's following this, you know, a little richer, and you know, be less have some financial freedom. And the goal is have 50% of your income passive by the time you're 50. That's the goal of this channel. If you're following this channel, hopefully, if you're not 50 already, you're gonna follow me, and we're gonna help set up a way for everyone who follows this channel to have 50% of their income not come from their job. 50% of your income should be coming from your passive investments, and we'll do that slowly but surely. So I'll talk to you guys soon. Please subscribe to the channel, and please like this video, and I'll talk to you guys soon.